in partnership with CommSec.
So this time yesterday, Thomas Piotrowski over at CommSec, we were talking about a troublesome day because of Chinese AI. The market's plunged. Has it bounced back today?
It has, Pete. There's been a recovery. I suppose there's a few more sessions required to make some inroads into some of the losses that featured yesterday. But in broad terms, technology stocks doing better, with the Nasdaq up by 1.7%. So compare that to the S&P 500, which is up by around 0.8%. The Philadelphia Semiconductor Index, which is a barometer of the chip makers, it has struggled this day. It was in positive territory at the start of the day, higher, but then sold off aggressively in the early part of its session and is recovered to be just in positive territory. That index, Pete, is made up of 30 stocks, including Nvidia. Today, that stock is up by 6%. So that's in the context of yesterday's decline of 17%, and in the process shedding around $600 billion worth of value. So the biggest loss in the value of an organisation in the history of the equity market. That's the sort of sign that makes you pay attention in the days hence. So, as I said, that 6% improvement, still a shadow of the loss yesterday. Importantly, we've seen other important stocks move higher as well. TCMC, they are the largest manufacturer of computer chips globally. That organisation suffered a 15% decline yesterday. It's up by around 4% today. So it's a work in progress, but there was also an acute focus on earnings numbers. That was a big feature of the day. Some of the organisations that did best were the cruise operators. So Royal Caribbean up by 13% on the better than expected earnings figures and improved outlook. European markets did well last night. You saw record highs for the German DAX and the Stock 600, which is the broader measure of European stock performance. And that brings us to the local session today, Pete. The futures are predicting will be up by 0.25%. At 11:30, we have the quarterly inflation numbers released. So these are important in the context of what the RBA might do next month when it comes to interest rates. The underlying rate of inflation, the trimmed mean, is expected to fall from 3.5% to 3.3%. A number in that order then will consolidate the belief that the RBA will be cutting interest rates next month. The markets have a 70% probability on that happening.
So 3.3, Tom, if it's under that, if it's that or under that, then a rate cut is in play, is what you're saying?
Pretty much, yes. So
okay.
What's important to understand as well, Pete, there's been a pretty decent downward slope in underlying inflation over the course of the last couple of quarters. So that is important as well in terms of the rate of change of underlying inflation.
Okay, well, that's the magic figure of the day. Thank you, Tom. We'll talk to you soon.